Hey traders, Raghee here. Let's touch on two markets we talked about just a couple days ago in these free videos, and that was gold and copper and also crude. So we've talked about these three markets in the past few videos, so let's go through them. Gold actually hit our trigger zone, and it's still kind of sitting in the zone, and this is basically one of the things that I always want to remind my traders of when we're talking about setups that we want to take. When I'm trying to set an alert up, I give myself alerts, right? As much as I send them out in the room. Alerts must be before we reach the zone and not after we leave it. And why this is so important, it seems so obvious, but a now alert doesn't help anybody. It doesn't help me. Because think about what we need to calculate to even make an alert feasible. I mean, there's some basic questions. Is the trade entry affordable? In other words, can I afford to lose from that entry? So the next thing is what would the position size be? I think another question would be, do I want to trade an option from this level or the underlying, right? There's a lot of questions, and then we need to do the math on all of that, right? Do the math after that, meaning, know what the risk is, know what the reward is, and to sort of reconcile well in advance. Am I comfortable taking the risk from a certain level? If I'm not, I can adjust the position size. I can adjust the alert to just be a lower buy or a higher short, right? So gold is one of those things where I think a lot of traders are comfortable with GLD calls from, say, 1551 and a half to about 1560, and then 1551 and a half to 1542 and a half would be a great place to look at potentially gold futures or even micro gold futures, because the distance here is in about $1,000 range. And for most traders, not all, right? Everyone's different, but for most traders, they can deal with $1,000 volatility on a overnight futures position. And if that's not comfortable, then you might even still persist with the GLD options until you get down to a reasonable amount of risk. Maybe it's 400, maybe it's 500. So you'll be thinking more like 1547, okay? But this is a buy. Earlier this week, we said that crude and copper were probably at oversold buy support levels. I think the closer we get to 50, crude gets much more interesting. We have a technical meeting of OPEC, which is when they consider what they may do in the next meeting, but it's not a legit meeting. We need to hear OPEC saying we're moving the March meeting to sometime in February, and at that point we'll see what the technical meeting actually resulted in and whether or not there could be more production cuts. I think crude is still a very, very tricky market to enter. But copper was a far better, that 250 level that we talked about here. Oversold copper, looking for a bounce, accompanying the move higher in the S&P and the NASDAQ. And these were both markets that we specifically had long options in. Options, again, a way to control risk. And, we liquidated a good portion of those today with the move. Breakout in the NQ to brand new highs and testing highs in the ES. So that kind of shows you what we've been doing so far. I like to come back and revisit the ideas and kind of show you where they are right now and why I did what I did and where we are now and what I anticipated. So I hope that helps, and I'll see you in the next update.